Good afternoon, ladies and gentlemen, and welcome to the Trinity Exploration and Production PLC Results and Company Update Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when these are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. And now I'd like to hand you over to Chairman Nick Clayton. Good afternoon.
Good afternoon, ladies and gentlemen. By way of introduction, my name is Nick Clayton. I was recently appointed as the non-executive chairman of Trinity following the tragic circumstances surrounding our founder, Bruce Dingwall. On the call, you will see also Jeremy Brindlesing, who should be well familiar to many of you, and who has recently been promoted to the position of Chief Executive Officer of Trinity. So before getting into the guts of the presentation, I think there are three key points that I'd like you to take away from today's presentation. The first is that Bruce was a giant in this company. He was a mentor to many people in Trinity. But since his passing, the board has taken immediate steps to stabilize the company and to shore up the board in his absence. The appointment of Derek as a non-executive director yesterday was an important development and one that shouldn't be underestimated. We've moved to create a technical committee, and there'll be more on that over the coming weeks, which is designed to give a rigorous technical challenge to the board. And we've obviously promoted Jeremy to the position of CEO, which gives us a more conventional corporate structure. Second point really to take away from today is that I hope you agree that we've delivered a pretty robust set of interim results, characterized by resilient production. A strong pricing backdrop has obviously helped in delivering a robust operating cash flow performance. And the third takeaway, I think, is that we've made material progress on a whole raft of strategic initiatives this year, and we're now in a great position to scale this business and to deliver meaningful and value accretive growth for shareholders. So if we get into the guts of the presentation, I think it's fair to say that Bruce, we're still reeling really from the sudden events surrounding Bruce. I really just want to draw your attention to the fourth bullet point on this slide, which really to say that, from the outset, Bruce has made a huge contribution to this company. He was the founder, he was an inspiration and a mentor. But we have a well-defined strategy and that has been created by the board and the executive management team, and the whole Trinity family is determined to realize the opportunities that we have at our disposal in Bruce's memory. I talked at the beginning about the changes that we've made at board level and organizationally. It won't have escaped your notice that we've moved to this more conventional organization structure. Previously, Bruce was an executive chairman. We've now moved to a non-exec chairman and CEO, which is a little bit more conventional. Derek Hudson, his appointment was announced yesterday. It's been in the melting pot for quite a time. But this is a really important appointment for the board. He is well known in Trinidad. He's well known in the industry. He's well respected and very well connected. And I believe that he's going to provide some invaluable insights for the team and the board in the months and the years to come. The technical committee, Bruce and I have jousted a few times over the need for greater technical challenge at board level. And the technical committee is a very swift move that we've made to put that in place and make it a reality. We will be putting the committee in place over the next couple of weeks, and it will comprise a couple of members of the board, including Derek, but also two internationally well-known consultants who will boost the challenge that we have at board level before considering some of the commercial aspects of the many opportunities that we have in hand. We have a strong alignment between the board and shareholders, I think it's fair to say. And one thing I would say is that having spoken to Bruce's family in the last couple of weeks, they are resolute in their support for the company at this time and have absolutely no intention of selling down their share price, their shares at this particular point in time. We've made a couple of expansions a couple of additions to the executive management team, and I think they are wholly deserved. In Denver, Prasad has been promoted to finance director, and Ryan Ramchuk, who is the linchpin of our subsurface analysis in the company, has also been promoted to the executive team. And I hope that these guys will become familiar to you over the years to come. I'd now like to hand over to Jeremy to give some context to the interim results and also to give the highlights of the interim results that we announced this morning.
Thanks very much, Nick, and thanks everybody for joining us this afternoon. I may ask Nick, I'll probably shut off the cameras so that we can preserve bandwidth as well as make the screen bigger for those who are viewing and they can see in a little bit more detail. So I'll just be turning off my camera.
Yeah, done it.
All right. Thanks very much again, Nick. On this slide, what we're trying to do and describe here is set the context over the last few years. And we've looked at particular metrics, and we want to describe what has happened in this story in the past, and also this lens naturally into our results for the half one 2021. We have grown production on a consistent basis from 2016 through into 2020. And whilst we've had a drop off in terms of the production between half one 2021 and half one 2020, that represents natural decline. And I must ask you to cast your mind back to when we last drilled, which should have been in late 2019. So actually the production has held up very strongly over that period of time, notwithstanding the significant impact of having to deal with a pandemic and trying to keep people safe during that period of time, as well as dealing with the restrictions that would have been placed by the government in terms of certain activities and limited movement during the period, in particular half one of 2021. So a lot of credit to the operational team and the HST teams on the ground for keeping our staff safe, but also keeping production strong. And that also is reflective of the fact that whilst we would have drilled these wells in 2018 and 2019, ensuring that we take care of the production coming from those wells ensures that we preserve the working capital cycle, the payback periods for those wells, which means that it then ultimately, whilst it drives good production and profitability, it drives the balance sheet cash accretion as well. Revenue over the same period was volatile, and whilst production grew, the revenue volatility was reflective of the volatile oil prices over that period, which I'm sure that you're all familiar with. OPEX and G&A over the same period were within a tight range, and we managed to keep that cost structure very, very focused within a small area. And whilst you will see this year that the OPEX is in a very familiar place and G&A maybe have risen slightly, that G&A is rising in order to make sure that we intellectualize to be able to deliver on the many opportunities that we have, and that we have the capability to see these through to fruition. Coming down to the bottom right-hand side, below the OPEX and G&A, we have the OPEX operating break-even, which has been below $30 for the last 5 years and running since 2016, in fact. And that, in fact, has underpinned the cash, which is on the bottom left-hand side, and you can see has grown period on period to the position where we are right now. And also the debt on the balance sheets, which was in 2016, we'd have had some debt, was expunged And then now we have just some working capital debt on balance sheet, which is drawn down to the tune of 2.7. And during the course of half one 2021, we'd have increased that working capital facility size from 2.7 to $5 million. I think the key takeaway that I'd like to suggest from this slide is that we have a low break even, and we've been able to do that for a considerable amount of time. And whilst that protects us from low oil prices, it also allows us to leverage on higher oil prices and be cash generative from low oil prices through to high oil prices, which has been important, not just from a P&L perspective, but in also strengthening the balance sheet. Focusing in onto the half one results, production held steady, down just by natural decline of 8%. And bear in mind that the wells that we would have drilled over 2018 and 2019, their decline rates are normally a lot higher than natural decline. So I think having a blended rate of 8% is quite good, especially when you look around the landscape in Trinidad, and you can see based on public information that a lot of production has dropped off over the same period by a significantly larger percentage. Again, testament to good operational practices and HSE practices. From a cash balance perspective, we are down by a very small amount when you compare half one to half two, but I'll explain what happened with the cash balance in a little bit more detail on the next slide. Adjusted EBITDA has been up, largely due to the increased oil price, and again, adjusted EBITDA less current taxes, which is a metric that is a bit closer to the operating cash flow, is also up, which means that the company has been generating cash over the period and will continue to do so based on this operating cost structure. Operating break-even of 27.8 and well within our set range of being below sub 30, and I don't see anything jeopardizing that towards the end of the year. So that's in good hands. And the net cash balance of 16.3 million, again, is the cash balance less the 2.7 million that would have been drawn down. OPEX and G&A costs, the 5-year average is 19.8. And for this half one, it is $20.5 per barrel. So again, in a good familiar space, and the guidance that we'd have provided to the market of 2,900 to 3,100 barrels, we are well on track to hit the middle of that guidance target for the not just for the half, but for the full year as well. So a comfortable place in terms of where our results are very familiar. And this underpins in terms, hopefully, what we are going to describe to you as some exciting opportunities that are facing Trinity. On this slide here on the left-hand side, we have the cash movement, and I will describe the $7.7 million in terms of cash from operating activities a little bit before. I think what I really like to focus attention on here is the investing activities and the fact that whilst we are creating cash, we are taking that cash that's coming in from the operational arm of the business and deploying that to try and move the business forward, to scale this business so that we can have a larger cash flow stream that can be utilized for a number of different reasons and have a consistent cash flow stream as well. The $4.5 million, I think some of the key elements of that would be one, in taking on the PS4 asset, we'd have placed a deposit of that for that asset of $700,000. We'd have also spent on the onshore 3D seismic. We'd have spent $1.2 million on that. And we'd have also continued to press ahead with the Gallius field development plan, the environmentals, associated engineering, and other aspects of taking that project forward. In addition to which we'd have spent on recompletions and asset integrity work. So very much in terms of growth, but also reinvestment in terms of the assets on a small scale. Moving across to the right-hand side, looking at our hedging, which forms a core part of the financial strategy. Just to remind you, the main priority of our hedging is to ensure that we protect against periods of low oil prices. And by doing so, even though we have a low operating break-even, it allows us to also spend capex at a certain level that allows our operating team to carry out their jobs and do so in an unfettered manner during periods of oil price volatility. And this in turn actually preserves the economics of the projects that they may be going after, the integrity of those projects in terms of not having to start and stop, both financially and actually carrying out the projects, and also from an HSE standpoint by having focus on getting a job done and completed in one approach also improves those metrics as well. So there, from a financial perspective, it's important to see that the impact there is that we preserve the balance sheet, but also it helps with the operational arm as well too. The second priority is to make sure that when the opportunity arises, we can mitigate the impact of SPT on the offshore licenses. This only tends to happen when the oil prices actually are quite buoyant. When I'm saying quite buoyant, north of $70 for the period in front of us, and we generally tend to try to hedge out of a period from 6 to 9 months from the current period. Going anywhere beyond that, the hedging becomes quite expensive because the market is typically skewed towards the put side and tends to be more expensive there. So we generally tend to look ahead 6 to 9 months, and that's why you can see when you look at the graphic up above, we are hedged for half 2021 and for half one of 2022. So our focus going into Q4 of this year will be trying to fill the hedging position for half two of 2022. Trinity still is, the various contracts that we use vary between puts and calls as well. And in the case of when we utilize calls, which will limit the exposure to upside, we ensure that this is only for a small percentage of production, normally between 25 to 30%, and therefore the remainder of production still has exposure to the upside in oil prices. You'd have also noted on the P&L that we would have had a fair value loss of $2.1 million, just to make it clear that that is not a $2.1 million of cash heading out the door immediately, but it is a mark to market, or it is what is more familiarly known as a fair value of the contracts that are in place, and those will be unwound throughout time, and depending where the oil price is, we'll either end up having to pay nothing or the liability associated with the oil price when it is higher than those contracts. But just to remind you, we have a significant amount of production in place that will have the exposure to upside, so the net position to Trinity will be a positive one. Nick, I'll hand over to you.
Thanks very much, Jeremy. I think it's useful for us all to take stock on the very significant progress that we've made on some of these strategic initiatives over the last 6 to 9 months. Because this is really what's driving the excitement of the board and the management, and our belief that we have the opportunities to scale the business in a meaningful and value accretive way. I'll just run through a few of these, but really ask Jeremy to get into the detail. The first is the negotiations on the LOAs onshore. The move from 5 to 10 years was significant. But we have seen a fairly material improvement in the commercial terms of our onshore LOAs. And obviously front and center at that was the agreement that there will be no SPT on the onshore for 2021 and 22. Now, I know that a lot of people are getting itchy feet about the 3D seismic interpretation. Why isn't it happening more quickly? But I have to say that, we have a dedicated team working on this exercise. It is very complex. We are looking at existing plays over a regional context as opposed to on a license by license basis, and we are developing new plays as we look at the 3D. So the message here is be patient. We are building the hopper of drilling opportunities, and there are several already in there. But it would be remiss of us not to be sitting back and looking at the breadth of opportunity, ranking those opportunities before we go off half-cocked. And the idea is here that, we clearly want to get the best bang for our buck. But in terms of drilling, Jeremy can talk to this later, but we will be getting back to drilling at some point early next year, and I'll let Jeremy talk about that. The PS4 acquisition basically gives us a lot of running room. It's contiguous to our existing acreage. There's been very little work done on this block over the last several years, and this really is giving us a lot of room for excitement in terms of developing opportunities to increase existing production on this block. And I think it really gives us something to a bit of a test case, I suppose, and demonstrates to me, and certainly demonstrates to the board, that we have a real opportunity here to be a sort of a local consolidator in onshore in Trinidad. The capital reorganization is important. It's important because this time, 12, 18 months ago, there was no way on earth that this company would be able to return capital to shareholders under any circumstances. And I just want to be clear that what we're doing here is to create the option. I think it's fair to say that the board is confident that we have a whole range of opportunities here to deliver value, and probably now is not the time to be returning capital to shareholders. So, we're opportunity rich, and the one thing we don't want to be doing is getting capital constrained too quickly. So Galliota, don't underestimate how difficult, intense the negotiations were to finalize that 25-year license on improved terms with a transparent pricing mechanism, which has really given us the platform to be able to initiate the farm down process, which will take place at the beginning of the fourth quarter. At the beginning of the fourth quarter, at some point in the fourth quarter, and probably the beginning. We're looking at or finalizing the seismic reinterpretation on part of this block, as well as working with NS&I on finalizing a CPR, which obviously is an important component in allowing us to optimize the value of the farm down for shareholders. Excuse me. I think it's well documented, NWD and Jubilee, and we're working with our partner there. These are potentially sort of moving the needle type opportunities, provided we can get our heads around the technical aspects of these things. We're in the process, and those bids need to be in before the end of this year, and I'll let Jeremy talk to that as well. The solar and renewables assessments are really at this stage designed to support and improve the economics of Galliota, and those studies will be kicked off very shortly with that in mind. So Jeremy, do you want to just run through some of these things in a little bit more detail?
Certainly, thanks, Nick. Just following on from what Nick described about improved commercial terms for the onshore lease operating agreements and Galliota, I will quickly take you through the analysis that we have here that describes in the graphics what the impact to the netback has been for the onshore. So you see that increase from 18 to 20%. And down in the text box below, you see that the impact on NAV is an increase over oil price range of $30 to $65 per barrel, so that you can see the impact across this broad range. The increase has been 4 to 14% and 12% based on the current forward curve. And the reason we've chosen a broad range is to demonstrate the impact of what had happened at low oil prices as well as high oil prices, and that these contracts have generally been upside for us, certainly incremental in the case of the LOAs. But when you look at the Galliota impact and you look at the Trinitys movement on netback there from the 19 to 22%, and then on the combined, the increases there, they are more meaningful. And what it demonstrates underlying that is that the overriding royalty rates that the partner was requesting of us on the Trinitys has been reduced, and here therefore increased the netback there. And on the Trinitys plus Echo, the reason for the larger increase is because the Echo development has been incentivized with a very low overriding royalty rate for a period of time that allows the operator Trinity to be able to accelerate its payback period. And you can see again down in the text box in the fourth bullet that the impact on NAVs is a very large range, going from 25 to 94% in the Galliota NAV, which is quite substantial, and at current forward curve, a 75% increase in the NAV. So a lot of value has been brought to the table through these commercial agreements, and it's now for the management team to bring that production and deliver that and to get the associated cash flows. Focusing on to the onshore at this stage here, and the onshore has been a key hub for us and has been a cash generator. And we were taking a very traditional approach a few years ago. We've now modernized that in terms of looking at getting more data. This is why we purchased the onshore seismic, and quite importantly as well to automating wells, which allows us to move from looking at lagging indicators of when wells fail to looking at leading indicators and trying to intervene before wells fail, which in turn improves your production volatility and increases your ability to be able to react quicker. And the overall impact is better prediction on your production, as well as lower operating costs. We'd have seen and learned that and benefited from that on the East Coast, and that's what we're doing on the WD-56 pilot project, which is our largest onshore asset. The SPT reform, we've benefited significantly already from that, given where the oil price is. That 2-year period is an initial period for 2021 and 2022. We are, of course, working as best as we can to try and show the government that we are, very thankful for this, and we will have activity sets that are reflective of this and our ability to invest. But also, we want to work with them to try and extend this for longer periods so that we can be able to have more certainty on the fiscal regime and the associated returns. On the 3D seismic interpretation, again, just delving a little bit deeper to what Nick mentioned, we've had a number of comments coming in where people are quite excited by trying to see what the results of these are. And I'll just describe a bit broadly in that the 3D seismic over our assets. And if you look to the center graphic, you can see where our assets are: WD-56, WD-2, which are in the Palo Seco area, and then WD-13, WD-14, and FZ2, which are in the Faizabad area. Those are our windows in what is a larger polygon. You can see that encapsulates that area, and these are our windows into the Northwest District Seismic Survey, which is an important point that I'll get to shortly. But in looking at the data quality is good and bad in some areas, and we've taken some time to get that data into good shape, tie that and match it back and correlate it to existing wells, both modern and old wells, because these fields have been in production for many, many decades, close to a century, in fact. So we put in that information together. When we drill a well onshore, it's important to remember that we typically encounter between 6 to 8 different reservoirs, and in some instances even more than that. So we are mapping at each layer to ensure that we don't leave any zone unturned, and that is taking some time to go through. On the Palo Seco area, we have worked through a significant portion of this, and the Palo Seco area is the focus because this has been the most prolific area for us in the past and in recent past as well too, in terms of our drilling program. So we are going back to areas that we have been very good for us. We have found very good leads from that, and in fact some of those are progressing into being drilling candidates, and we are hoping that the hopper will begin to build towards the end of October, and that hopper will come alongside a larger piece of work where you've now dedicated an entire technical team to focus on looking at the seismic and fast track that exciting work. Some of the opportunities are not just infill drilling and replacement drilling of wells or drilling high angle wells. We are actually seeing areas where there are potential for appraisal of opportunities that have been touched on but not fully appraised, and even exploration areas within this. So the 3D seismic is very illuminating, and it presents to us a number of opportunities. And within there is a good capital allocation challenge that we have in terms of making sure that we deploy our capital to get the best returns. And we are taking the time, giving the technical team what they need to be able to provide their interpretation and guide us as to what is the best set of opportunities that we can go after and deploy our capital. That said, we would like to be able to recommence drilling in Q1 of 2022, providing that we have the right opportunity set in front of us and the macro environment is set. So that is our aim, to resume drilling, and we will continue to work on the high angle horizontal wells as a priority and try to perfect not just the subsurface but the drilling aspect and the completions and production, so that we can actually move ahead and deliver on this increased or this transformative approach to drilling and exploiting the hydrocarbons. Moving across to the acquisitions, PS4 fits very nicely next to WD-56 and WD-2. It is right next to an area which has been very prolific, and WD-56, as a reminder to some who may not know or not familiar, WD-56 currently does in the vicinity of 1,000 to 1,100 barrels. So is very much the engine room of the onshore. But a short while ago, prior to us actually taking on the WD-56 asset in 2012, that asset was doing between 1,500 to 1,800 barrels through hard work by the drill bit. And that asset would have seen 30 wells drilled in recent times. And that is what really took the production from almost zero and take it up to 1,500 to 1,800 barrels. And the asset right next door, which is PS4, has not seen the benefit of that hard work by the drill bit and only seen 6 new wells drilled over the last 3 decades. So when you combine that, in fact, the fact that the asset has been underdeveloped in comparison to the asset right next door, the geology continues into the PS4 area. We have 80% seismic over this existing block. And in fact, once we get the block in our hands, we will purchase the remaining 20% and complete the reviews there. We think that the block presents the opportunity for a lot of running room. In terms of the near term, the block is currently doing around 85 barrels. We hope to get close to doubling that within the within the first 6 to 9 months of the asset being handed over through well workovers, reactivations, as well as doing recompletions. And whilst we are doing that, we'll be getting the drilling hopper ready for this asset as well too. So we're looking forward to getting our hands on this asset and showing what was done for WD5, 6, and what we've done in WD2, and replicating that success in the PS4 area. Moving across to the NWD, and again, casting your eyes back to the middle graphic and seeing the size and the scale of the NWD 3D seismic area, and the fact that we have had some seismic, we've had 2 windows of that seismic with us for some months now. It puts us in a position where, one, we operate in that space, so we're very familiar with what the surface issues are. We are familiar with the subsurface and production challenges that happen in terms of gas or sanding or other mechanical issues. And certainly from now having the 3D seismic to help illuminate the subsurface and us being a certain way along progressing that, I think it's put us in a position where we are very eagerly looking at the NWD opportunity and working together with the key and technical team to craft a technical story that looks not just at the Cretaceous, but also shallower opportunities within that we can perhaps present an opportunity to Heritage, which will hopefully be something that they can consider favorably. And our intent is to provide work through the data room now, come up with a technical story. If that is quite compelling, we will be aiming to put a bid into Heritage towards the middle of November, which is when the timetable calls for that, and moving that forward. So as that progresses, we would like to describe that to you in more detail. And whilst we understand the onshore better, I think just to expand upon Nick's point, we do see ourselves based on our low operating costs, good financial returns, good technical know-how, and improving that through the 3D seismic, our HSE capability, operating capability, hopefully being able to be one of the onshore consolidators of these smaller assets that have potential high impact by way of production and cash flow. Gallius has been an asset that we have been speaking about for some time, and it's very much coming close to maturity now. And I'd like to describe, what we have been doing in recent months in preparing this asset and getting it ready to be brought to market so that we can monetize and move forward to first oil. And one of the first steps that is not actually here is that we put together a little while ago what was the license and the associated commercial documents. And those are very important documents in being clear as to how the license will be governed going forward. So those have been put to bed, and those changes, as we mentioned before, from an NAV perspective, are very accretive, but also from the guidance, the work obligations, they're now very much aligned as to what the geology of the block is. So that puts us in a good position in that what we want to do to develop the block is aligned with what the Ministry of Energy's requirements are for the block. So that's a very good, harmonious place to be in. We have submitted a field development plan to the Ministry in May of this year, and the Ministry team and our teams are working through that as we speak. We are hoping to get feedback from the Ministry during the course of this month or early next month as to their view on the FDP, and that is one critical path item. The second critical path item, prior to being able to start commencing marketing for the Gallius asset, is getting a CPR completed, and the seismic reinterpretation that we are doing is coming to a close as we speak right now. And that will fall nicely into the competent persons report that we'll be doing with the help of Netherlands, Seals and Associates. I'll be aiming for that to be completed in late September into early October. Once the FDP, we've got a view from the Ministry, and the CPR has been completed with the improvement of the reinterpretation of the seismic, we are hoping then to commence a marketing process, which should kick off in late October to early November. and this will be led by a third-party advisor who is very familiar and very current in terms of the market as it relates to acquisition and divestiture. And we'll be working with them alongside our management team and putting together what we hope will be a very transparent, clear, modern process that allows people to see the technical work that has been carried out and therefore the associated value with Gallius. I think I'd also like to point out that Gallius in itself offers a range of opportunities. One, through existing production on Trinities, and that means immediate cash flow. Near-term, low-risk development in terms of Echo that has been de-risked through the Gallius T-Gal well that was drilled in 2013. And then we have upside low-risk appraisal in the form of Foxtrot and Golf that will benefit and synergize from the infrastructure that will be put in place through Echo. In addition to this, we have a significant corporate tax loss associated with this asset to the tune of $164 million, and that will form a very strong tax shield, and again accentuate the ability for the cash flows to come back into the operator or the partners that operate the block and reduce payback periods and reduce the associated financial risk with this. We are hoping that through this process that we will commence in middle of Q4 or so, that the process will take anywhere between 6 to 9 months. At the appropriate times, of course, we'll make sure that we keep the market apprised on this, but we're hoping to work through this smoothly, and we believe that this pre-preparation with the FDP, the commercial documents, the CPR, will make for a smooth process. This slide captures the opportunities that some of which we've described before, and I don't propose to go through those in any significant detail because we have done prior, but there are two that are highlighted in blue, and one of those is an onshore gas opportunity which resides in the Tabakit block, which is not too far from the existing Shell's central block. It is not an opportunity of that sort of scale, but certainly we feel that it has the scale and size to be able to allow us to get our micro LNG initiative off the ground. So we have 3 existing gas wells in the Tabakit field. They are not producing currently, but they do have some small potential. But there's actually some upside infill potential that the team will be looking at. And as we work through those, that's something that we'd also like to describe to the markets in due course. On the West Coast opportunities, we are speaking here to the PGB license, the Point Ligu, Guapo Bay, and Brighton Outer Marine license. And the other license is the Brighton Marine license. And within both sets of licenses, we are seeing opportunities for not just infill, but appraisal and potentially exploration, as well as an unconventional opportunity. Again, this is hopefully what I'm trying to describe here, is that the opportunity set that we have across Gallius, NWD, Jubilee, we also have within portfolio opportunities of different size, risk, and impact. And we'll be working through these from a subsurface technical perspective, making sure commercially they're fit for purpose, and of course that we have the environmental ability to move forward. And we like to describe that to markets in due course. I guess the main takeaway from this slide is that Trinity has a number of opportunities. And in looking at the opportunities in front of us versus the cash pool that we have, we want to be very careful about making the right choices and being able to deliver the highest impact, lowest risk opportunities to Trinity and its shareholders. Nick, I'll hand over to you for this slide.
Thank you very much, Jeremy. A lot of data on this slide, everybody, but so I don't propose to sort of spend too much time on it. I think the key takeaway from this slide is the fact that the board took the decision to embark on the capital reorganization some 12-18 months ago, and the completion of that process. The most important thing is the creation of distributable reserves at around $50 million US dollars at the PLC level. And the most important thing is that it gives us optionality clearly with respect to returning capital to shareholders, either in the form of dividends and or share buybacks. But I think it's fair to say that hopefully we've convinced you that there's so many opportunities in the hopper at the moment that I don't think the board is of a mind to exercise the option just yet. Jeremy, do you want to take through the ESG?
Yes, certainly. Thanks, Nick, we're not going to delve into this into detail. There's a lot of tactical points here, but I think strategically, what we are looking at is that the ESG narrative is building. And although we may be small and not necessarily in that space, certainly being prepared for what may happen in that space and where we want to go is something that the board and management are key on. And we've seen it impact in a wider space, impact areas such as insurance premiums in terms of increasing premiums through the paucity of providers who would like to provide to oil and gas companies. So being able to demonstrate strong ESG credentials will be helpful in that regard. And also from a cost of capital, in particular debt, being able to reduce that cost of capital through strong ESG credentials is also a trend that we are seeing come into pass. So a lot of the tactical areas that you're seeing on the left-hand side are in favor of us building a stronger ESG plan and putting that into place and working that through during the course of 2022. In wrapping up, and I think complementary to Nick's comments, that he made earlier, we have a very resilient existing platform consisting of the onshore production base, but also the West Coast and the Trinity's East Coast assets. And those have held us in good stead for some time. And I think what we really want to do is take this now and scale that through these opportunities that we have in front of us so that we can increase the cash flow stream, increase the consistency of that stream, and use that stream to grow, reinvest, but also return value to shareholders at the appropriate time. I think we are working through those opportunities right now. They are very exciting, and the foremost of those is the Gallius license, certainly by way of size and the opportunity that brings, not just from production, but from a cash flow standpoint. So the board and management are focused on delivering a farm out process or farm down process that is successful and demonstrates the ability to monetize these assets and bring value to shareholders. Whilst we're doing that, we want to do that in a very modern way that is complementary to us developing our ESG credentials, and again endears us to the hydrocarbon basin that is Trinidad and Tobago, which is large, which there are a number of different opportunities. It's a very active place, both corporately and technically, and we feel by the combination of these things, we will be growing us into a position where we will be able to be a cash deliverable company on a consistent basis. Nick, I don't know if you would like to add to any of that before we close off.
No, I just really just before we get into the questions, maybe we just put the cameras back on, Jeremy. Before we get into the questions, I'd just like to say thank you very much to everybody for listening in today. I'd also like to say thank you very much for your continued support as shareholders of Trinity. The last 12-18 months have been kind of difficult for the world, what with the COVID pandemic, but certainly the last couple of months have been extremely challenging for Trinity as well, given the unfortunate events surrounding Bruce Dingwall. And our thoughts and prayers go out to Philippa, his wife, and the three boys, the family. And then finally, just to say that we've put in place a number of things since Bruce passed, and I just want to give shareholders some comfort and be rest assured that the entirety of the team at Trinity are doing our very best and will do our level best to make things happen and to deliver value for shareholders.
Nick, Jeremy, thank you very much for your presentation today. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. We received a number of pre-submitted questions from investors today, and we received a number of questions during the live event, and I wondered if I could hand back to you to read the questions and then provide a response where it's appropriate to do so.
Yeah. So the first question was, will there be an organisation and strategic update by the company following the news? Well, hopefully, the details that we've provided you in the results and in the presentation has provided everybody with enough food for thought in terms of the strategy and development of the company, I hope. There was a question for Jeremy and me, actually. Do you have any new ideas to take Trinity Exploration forward? Well, I think it's important to recognise that the current strategy and direction of Trinity has been established by the management team in conjunction with the board of directors. Bruce has been instrumental and very important in the direction of the company, but it has always been and always will be a team effort. So we've put together a whole broad set of opportunities that we can collectively scale the business in a meaningful way. And we're going to continue to pursue a very clearly articulated strategy in our view. It's a process of evolution, not revolution, I have to say. Question 3, who is organising the Farmout? Well, I think hopefully it came across in the presentation that we have a short list of specialist A&D advisors and the appointment will be made literally imminently. They're going to run the Farmout process with clear input from the company on the technical aspects and other commercial terms. And NS&I will complete the CPR, which will form an independent verification of the reserves and resources for Galliota. Would you prefer a Farmout, joint venture or other on Galliota? Well, I think the bottom line is that, and chip in here, Jeremy, if you have anything to add, but I think we've got to be receptive to any and all offers that are likely to come across our door over the next 6 to 9 months. What we're not envisaging is accessing or having to access major sort of equity capital or capital in the equity markets rather to specifically fund our corner of this project. A value driver for us is the $164 million of tax losses available to the Galliota block development, and that could be accessed by a prospective buyer to improve valuations and returns to both parties. Excuse me. Here's a question that we've been asked on numerous occasions. Should you not spend £1 million on buybacks over the next 12 months? Well, I think hopefully we've demonstrated that we're potential long on high return opportunities at the current time. So believe that we can get better returns via our investment activities at this stage. But clearly we're going to keep buybacks and other returns to shareholders under consideration as a tool to return value at an appropriate time. So important to recognise that the capital reorganisation gives us the option, but I think we are pretty resolute that there's too much in the hopper at the moment that can benefit shareholders for us to be returning capital unless there were some unfortunate developments in the marketplace. When will the Moonsea or the PS4 oil acquisition complete? I think it's fair to say Q4. This is just going through the machinations of the Trinidad process, and we're expecting something to come out, the white smoke to appear at some point in the not too distant future. When do you think Trinidad will change SPT tax for offshore? Well, I think it's fair to say that we, Jeremy, and others are working with other members of the industry in lobbying the government to try to improve the background and the backdrop to SPT. And I'm sure Derek will have some influence and input into that lobbying process. But let's be clear, I think it's likely to be a slow process, but it's something that we will continue to work on over the coming months and years, probably. So that's pretty much covered off the questions that certainly I've seen that have been submitted prior to the meeting. I've got a question, Jeremy. I'm going to pose a couple of questions to you.
Sure.
There's a question from Andy M. Will you be looking at hedging production at current rates? And what oil price do you look to model projects on for project returns?
Yep. Thanks, Nick and Andy. Thanks for your question. The hedging is a rolling process that we do. So we are consistently looking at hedging. We fill the books for the next 3 quarters in terms of what we like to hedge at current prices. And the next step will be hedging the next quarter after that, which will commence in Q4. So whilst the oil prices are high, the process that we usually employ is putting limit orders in place that allow us to benefit from spikes in oil price, and that may only happen for 10 or 15 minutes. And once we've got those orders in place, they actually get filled, and we are able to benefit from that. So it's something that we look at on a continuous basis. With respect to the oil price that we model projects on for economics returns, Trinidad is a little bit different in terms of having the SPT in the fiscal regime, and therefore it makes the having a specific oil price for particular returns a little bit tricky. With the onshore, with this being moved from $50 to $75, it gives you a lot more running room. And in fact, what we are always looking at is trying to be able to have a capex program or drilling program on the onshore that is accretive from $50 upwards. So that is an oil price, and we are well within that range right now. So that's why we feel comfortable to say that we are hoping to return to drilling in Q1 of next year.
The question here from Michael C. Receivables have increased substantially. Are there any payment issues? So we should probably reference the VAT position. Jeremy?
Sure. Michael, thanks for your question. In terms of any payment issues as it relates to crude oil delivery, we have 0 issues there. Those are paid on time on a consistent basis by the national oil company who purchases all of our oil. So nothing there in terms of crude oil delivery. The challenge that we have when it comes to receivables is our VAT refunds, and it's not Trinity alone. This is, in fact, not even industry specific. It is more at a national level. VAT refunds have been very slow in coming. The government, during the course of 2020, would have offered VAT bonds to people who have significant VAT receivables, and we would have benefited from those and have had, I think, an inflow of $2.3 million associated with that. They have not done so for this year as yet, and our receivables position has increased as a result. But this is an area that we are looking at across a number of different areas, both from individual company discussions with the Board of Inland Revenue and the Ministry of Finance, and we'll be increasing this into a wider industry lobbying effort very soon.
Yeah, so I think the main message is we're on it. We know it's happening and we're on it. Okay. There's a question from Ross A. Do the new Galliota arrangements with Heritage, whereby Heritage now takes an overriding royalty, benefit Trinity by virtue of the overriding royalties being deductible for SPT purposes? Was this part of your thinking?
Thanks, Nick. I can take that. Ross, thanks for your question. That's a very key one to pick out. Royalties are indeed deductible against SPT. So it was a complement to the thinking. I think what we were originally thinking here is that the national oil company, because of their debt position, are not able to put significant amounts of cash into exploration or development expenditure. So when they signaled to us that they may not be able to participate as a partner and they wanted to convert their interest into override, I think naturally we looked at the fact that we will be able to deduct override for purposes of SPT. But simultaneous to that, we were trying to ensure that the overriding royalty cash flow versus our cash flow as operator was proportioned in such a way that it was reflective of the overall risks associated with the Galliota license.
Okay. I've got a question here from Ashik S. Why delay in completion of PS4? And I think I'm quite happy to take that, Jeremy. There is nothing sinister in this, Ashik. we are talking about a ministry, a government. We're in the breadth of a pandemic where we've had a state of emergency in Trinidad. For all sorts of reasons, there are things that are just taking longer than perhaps they would ordinarily do. And I would urge you to only look in this country, because trying to get anything through planning or the like in the UK is an absolute nightmare at the moment. So it's no different. We're talking about a government department, and there's no major issue here. It's just we've just got to wait for it to go through the system.
Nick, if I may just add to that, Trinity recently had 6 licenses go through the Ministry of Energy for approval, and all of these were successful in very recent past by way of the Gallius and the onshore lease operating agreements.
Exactly. Thank you. Darby K. Apologies if I got the pronunciation wrong. What are your thoughts on M&A in the geographical area, in the region? I think it's fair to say that, Jeremy, we can both answer this, but we're open to thoughts on all thoughts, really. I mean, at the end of the day, we see ourselves, the PS4 gives a very good example of our ability to act as a consolidator in country. And I think we have our eye on the ball in terms of looking for other opportunities along the lines of PS4 that complement our existing asset base and allow us to scale the business. With respect to more corporate things, I mean, clearly any board has to be open and receptive to any sensible conversation that comes through the door. It's as simple as that. But clearly, just to be clear, we have a very strong opportunity set here, and we are very focused on realizing the value of that.
I'll just add to that, Nick. When we put together, we are consistently scanning the environment, and opportunities do come up from time to time. But it's important that we are able to demonstrate internally and externally the value of these opportunities. And if that is not necessarily clear either through the data sets that are being provided or the valuation or the pricing of the particular opportunity, it's something that I don't think we'll be actually keen to pursue. We'd like to be able to be clear on the value that we will be bringing to the table, as is the case of the PS4 acquisition as an example.
Yeah, clear. Absolutely.
Nick, Jeremy, just mindful of time, obviously coming up to the hour mark now. I just thought it'd be an opportune time to wrap up, and obviously for every question you answer, another one comes in.
Yeah.
So, of course, the company will review any further questions submitted and publish responses where it's appropriate to do so. But just before doing that, Nick, I just wondered if I could ask you for a few closing comments.
Yeah, as I say, I mean, I thank you very much, everybody, for attending the presentation. Jeremy and I have been working very closely together, much more closely together over the last few weeks. And I have to say that we as a company, we as a board, we as a team are very excited by the breadth of opportunities that we have in the hopper at the moment. So thank you for your support as shareholders. I hope you continue to support us, and we will be doing our level best to deliver the value that's unquestionably contained in the opportunity set that we've described to you today. So thank you.
Nick, Jeremy, thanks again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but is greatly valued by the company. On behalf of the management team of Trinity Exploration and Production PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and a good afternoon to you all.